What if you had to choose between 10 Bitcoin and $1 million? Most people would pick the million. It feels safer, more real. You can buy a house, a car, you can touch it. Spend it today. Bitcoin, just code on a network. Pull the plug and it vanishes, right? That's how most people think, especially when Bitcoin swings like a roller coaster. Last week it dipped below $80,000. Who wants to gamble when $1 million in cash sits on the table? But what if the game changes? What if that million loses half its value in a few years? What if the people running the world start saying Bitcoin's going to $200,000 or $1 million? What happens when the dollar buys less and less while Bitcoin keeps climbing? Would you still take the cash? Or would you finally wonder what they know that you? Most people think in short-term snapshots. What can I buy now? What feels stable today? That's why they pick cash. It gives them instant access. But value isn't just what you can buy today. Value is also what you can still buy tomorrow. $1 million today might not be $1 million next year. Look at history. During financial crashes, everything drops. Stocks collapse. Real estate tumbles. The dollar shrinks in power. If that million loses half its value, what are you really holding? Now flip the question. What if Bitcoin gains value while everything else falls? What if those 10 Bitcoin are worth 10 million down the line? You'd feel foolish holding paper that can't keep up. This isn't a fantasy. It's already happened. 15 years ago, Bitcoin was dismissed as a joke. People laughed at it. Now nations are buying it. Some may be selling their gold reserves to buy more. Even the critics are changing sides. If you're still thinking short, the people who print money are preparing for a different outcome. The US government once called Bitcoin a threat. Now it holds over 200,000 Bitcoin. Most of it was seized from criminal cases. But they didn't sell it all. They are keeping it. That should tell you everything. The game has changed. Control no longer means printing money. Control means owning the digital future. And Bitcoin is becoming part of that future. Not because it's private. Not because it's free from governments. But because it's now something they can use. Bitcoin was supposed to be decentralized. But most people don't buy real Bitcoin. They buy ETF. They buy futures. They buy paper contracts that say Bitcoin but don't hold the coin. These products are controlled by institutions. BlackRock, Fidelity, big names that follow government rules. And that means Bitcoin is no longer out of reach. It's being pulled into the system. When you buy a Bitcoin ETF, you're not escaping the banks. You're feeding them. That's the real story. Not just price, but control. The US keeps spending more than it earns. Tax revenue isn't enough, so they borrow. And when borrowing gets hard, they print. This isn't a conspiracy. It's a pattern. Debt piles up. Bonds lose buyers. Interest rates rise to attract more investors. But rising rates slow the economy. That's the trap. The US needs money to run, but every fix creates new problems. If bonds fail, if no one wants them, printing is the only choice left. Print more, borrow more, inflate more. Now imagine the impact. Inflation eats your savings. Your dollar buys less. Your rent rises. Groceries cost more. And the assets, stocks go up, gold rises. Bitcoin climbs even faster. It becomes the sponge that soaks up the excess money, the new safe haven. Not because it's perfect, but because everything else is broken. In every crisis, the US prints more. In 2001, it was tech stocks. In 2008, it was housing. In 2020, it was everything. Zero interest rates. Unlimited stimulus. Markets got addicted. Now, even a small rate hike causes panic. Just like giving a child a phone to stop them crying. It works until you take it away. Then the real screaming starts. The same thing is happening with money. Take away cheap loans, and the system shakes. So they pump it again. But each time it takes more. More printing, more inflation, more instability, and fewer places to hide. That's why they need new asset containers. Stocks and gold aren't enough. They've been used already. Bitcoin is next, not because it's new, because it's unused capacity. Bitcoin has a limit. Only 21 million will ever exist. But Wall Street doesn't care. They don't need the coin. They just need the symbol. Bitcoin ETF, Bitcoin futures, paper assets that track the price. They create synthetic supply, unlimited bets on a limited thing. It's not about owning. It's about trading. That's how the system works. The more ETF people buy, the less Bitcoin stays in private hands. Control shifts from the crowd to the institutions, from the blockchain to the boardroom. Bitcoin was supposed to be decentralized, but paper Bitcoin isn't. It's tied to dollars, tied to compliance, tied to everything Bitcoin was meant to escape. And yet people keep buying because price rises, because it's easy, because they don't know the difference. And that stablecoins are the next piece of the puzzle. Digital dollars backed by real cash. $1 equals $1. That's the promise. But who controls it? Private companies, some based offshore, some connected to US regulators, and now to US leadership. When people can't access dollars directly, they use stablecoins. They convert pesos, dong, or rupees into digital dollars, then use those to buy Bitcoin, or move money across borders, or hold value in inflation-heavy countries. That demand keeps the dollar relevant, even when printed endlessly. If the US controls the stablecoin rails, it controls access. It becomes the gatekeeper of digital liquidity. And the more the world uses stablecoins, the more the dollar stays in power. Even as its value declines, its influence grows. That's how you extend control in a digital age. You don't just print. The US owes over $36 trillion. That number sounds impossible, but most of it is internal. Money the government owes itself. Only about $9 trillion is foreign debt. That's the part that matters. Can the US pay it? Yes, by printing more. But print too much, and the dollar loses trust. Still, as long as the world wants dollars to buy Bitcoin, it works. People will accept printed money if they can still use it. And most countries need dollars for reserves. They hold treasuries to earn interest. If they don't, the dollars just sit there doing nothing. Holding treasuries is just another form of holding dollars. So the demand continues, because there's no alternative yet. That's why the dollar stays alive, not because it's strong. Trump once called Bitcoin a scam. Now his allies are buying it. Some want to sell US gold to buy Bitcoin instead. Some say Bitcoin could be used to pay off debt. And Trump is no longer silent. He tells people not to sell. He signals support without making it official. That's how narratives shift. First you deny, then you study, then you adopt. The people he brings in all support Bitcoin. That's not random. It's coordinated. If the US backs Bitcoin while controlling the rails through ETF and stablecoins, they win both ways. They control access. They control liquidity. They influence price. And the public believes it's still free. That's the Wall Street has a lesson. A can of rotten fish passed from hand to hand. Each buyer pays more than the last. No one opens it until someone does and finds it spoiled. He complains, but the seller laughs. It wasn't meant to be eaten. It was meant to be traded. That's Bitcoin now. Not about use. About belief. About price momentum. About getting in before the next wave. Even the dollar works that way. It's paper. It only has value because people believe it does. And because a government stands behind it. Now imagine that same belief applied to Bitcoin. If the US starts treating Bitcoin like a strategic reserve, if institutions back it, if ETF normalize it, then it becomes another CAD, traded up the ladder, until someone pops. Most investors act on emotion. They chase highs. They panic at dips. They don't plan. They react. That's why they lose. Smart investors use systems, clear rules, defined entries, defined exits. They set stop losses. They set take profits. They don't guess. They follow structure. If Bitcoin hits a key level, they buy. If it drops, they cut losses. If it climbs, they lock in gains. They don't need to be right every time. They just need to protect their capital. That's the difference. Systems create discipline. Discipline creates survival. Survival creates profit. That's the edge retail investors still have. Big players move slow. You move fast. You shift between trends, between Bitcoin, stocks, gold, whatever holds momentum, but only if you have a method. No method means chaos. And Bitcoin could hit 200,000. It could hit 1,000,000. It might crash tomorrow or explode next year. No one knows the exact path, but the trend is clear. More adoption, more attention, more control, and more volatility. You don't have to predict the future. You just need to prepare for it. Follow the money. Track what governments are doing, not what they are saying. See who's accumulating. Watch who's shifting narratives. This is not about belief. It's about positioning. When institutions move, they move with purpose. They don't chase hype. They manufacture it. The passive path isn't about luck. It's about awareness. About seeing the system and playing by your own rules. If Bitcoin runs, ride it. If it turns, exit. If it stalls, wait. The only mistake is doing nothing, or doing everything without a plan. Choose your game. Stick to your edge. If you've made it this far, you're already ahead of most people. You're thinking deeper. You're seeing the layers behind the headlines. And that's what wealth building really takes. Not hype, not fear, but clarity. Bitcoin might rise. It might fall. But the system behind it, that's where the real shift is happening. Stay alert. Stay flexible. And always stay in control of your decisions. If this video gave you a new way to look at things, like it. If you want more clear and simple breakdowns like this, subscribe. Leave a comment below what's your take on Bitcoin's future, and share this video with someone you care about. Someone who's ready to think for themselves. Good luck on your path. Feel free to check out other videos here on the Passive Path.